हाय गाइस। आज के वीडियो में हम लोग करेंगे प्राइसिंग डिसीजन का सेक्शन ए क्वेश्चन और ये कॉपलान किट से है। सो इफ यू गाइस आर अपियरिंग फॉर पीएम एग्जाम, ये वीडियो आपके लिए यूजफुल होगा। सो फर्स्ट क्वेश्चन क्या है? विच ऑफ द फॉलोइंग स्टेटमेंट रिगार्डिंग मार्केट पेनिट्रेशन एज ए प्राइसिंग स्ट्रेटजी इज और आर करेक्ट? सो इज और आर मीन्स it can out of this option provided, one can be true or more than one can be true. So we need to figure out. So before solving the question, let's have a recap what market penetration strategy is. So if you look at my notes, market penetration, right below I have kept about this. Yes, market penetration is skimming. Yeah. So basically, in this strategy, company sell their product at a start at lower price just to only attract the customer quickly. Remember the Reliance Jio SIM? The Reliance company has launched their SIM at free of cost initially to all customer. Why? To attract the customer quickly. And once the market share grows, after later on they will increase the price, and same strategy has been adopted by the Reliance company. Okay, so where it will be suitable when we want to take market share as soon as possible. In that case, this strategy will be useful. And also when we want to deter new competitor to enter into the market, in that case also this strategy will be useful, because obviously initially when we are launching product, there are some fixed costs, there are some initial costs that has been incurred that we need to recover. And if Reliance company, for example, they have launched their SIM in free, there is no any competitor will come into the market with the same kind of product and provide this kind of services in free of cost. It's very difficult. They can come, but it will be challenging part. So obviously new competitor will deter in entering the market. Also large economies of scale, like if we are selling the goods at lower price, obviously there will be more sales, and in that case whatever the cost we have incurred, that will be spread to large number of unit. That means economies of scale, lower cost per unit, high elasticity of demand. So that means at lower price there will be increase in sales. Now let's come back to the question. So question has said, which of the following statement regarding market penetration strategy will be correct? So first is, it is useful if a significant economies of scale can be achieved. Obviously, just now we have seen that in market penetration we will lower the price, and if we lower the price, that means more sales will be incurred, and more sales means more unit we have produced and sold out. In that case, whatever the cost we have incurred, total cost, that will be spread to large number of unit. In that case, we will achieve economies of scale. Next, it is useful if demand for the product is highly elastic. Yes, just now you have seen in my notes, this pricing strategy will be suitable where there is high elasticity demand. Okay, so that means both are true, and answer is D. Okay, moving to the next, 105. Which of the following condition would need to be true for a price skimming strategy to be effective? Now let's recap the price skimming strategy. So sorry. So now price skimming is opposite of penetration price strategy. So here we will launch the product at a higher price to gain the maximum short-term profit, and later on we will reduce the price of the product so that more customer will be buy those product later on. Best example is iPhone. iPhone launched their product initially at the higher price, and later on they will reduce the price of same product so that they will attract the more customer. Okay. Now, when this skimming strategy, pricing strategy will be suitable? Obviously, when our product is new and something have unique feature in that case, obviously it will be suitable. That means there is no or little competition in the market. When product has a short product life cycle, that means we have incurred very large amount of R&D cost that we need to recover. Okay, or like for example, in case of iPhone, they used to launch new model at a certain gap certain period of time. So that means their product life cycle is very short. In that case, we need to recover the R&D costs very fast. In that case, this pricing strategy will be sorry, suitable. Now last, unknown price sensitivity. So we don't know like how customer will react. So we will start at high and lower if needed. And cash flow needed. So if company want cash or there is problem of liquidity, company want to recover the cash quickly, in that case obviously this strategy will be suitable. Now let's come back to the question. An existing product where the owner have decided to increase the price to move the product up market. Just now we have seen that it is when it is suitable when the product is new and unique. In existing product it won't be work, right? So that's why option A is incorrect. B, when the product has a long life cycle. No, just now we have read when product have a short life cycle, in that case this strategy will be suitable. Just example is iPhone used to launch their model on a certain gap or certain period of time. In that case they want their cost to be recovered because they have huge amount of cost incurred in R&D, research and development, so that we need to recover. So when the product when product has a short life cycle, in that case product pricing skimming strategy will be suitable. So as for skimming, as for short life cycle, just remember, okay? So B is not correct, C is correct. However, now let's go to the D. When only modest development cost has been incurred. No, when there is huge amount of research and development cost has been incurred, in that case this pricing skimming strategy will be suitable. Okay, now next. Which two of the following circumstance in relation to launch of new product favor the penetration pricing strategy? Okay, which two of the following circumstance favor the penetration pricing strategy in relation to launch of new product? Now first is demand is relative inelastic. Okay, so now the question is asking in the favor of penetration price strategy. So in penetration price strategy, what we have learned, when demand is high elastics, so this is not suitable. Okay, first option will be not suitable. Now there is significant economies of scales. Obviously if we adopt penetration pricing strategy, we will obviously have a large amount of economies of scale, so this is correct. Okay, the firm wishes to discourage new entrant to the market. So just now we have learned, so if you want to deter new competitor from the entering into the market, penetration pricing strategy will be suitable. Okay, and the last, product life cycle is particularly short. This in this case skimming strategy will be suitable, not the penetration pricing strategy. That means B and C is suitable one. Like these are the two circumstances in relation to launch of new product where penetration pricing strategy will be suitable. Now 107, which of the following condition must be true for the price discrimination strategy to be effective? Now let's recap the price discrimination strategy. Price discrimination, yeah, here we have. So in this strategy, companies sell the same product and services at different price in different market. So price difference not based on the cost, but market factor decide the price. So condition, when seller has some monopoly to control the price so that they can sell the same kind of goods or services into different market at different price. Customer can be divided into the separate market. So when the customer they will divide customer based on the or income, based on their classes, or based on like their they will have some criteria to divide the customer, and based on that they will charge the price accordingly. Customer can't buy cheap in the one market and resell in the in other market. Obviously there is no chances like one customer will buy this product and sell in the other market, because it will obviously be black marketing, so which is not suitable here. Different price sensitivity, that means elasticity in each market. So in that case this price discrimination strategy will be suitable. Now what the question is asking, which of the following condition must be true for the price discrimination strategy to be effective? First, buying power of customer must be similar in the both market. No, Buying power should not be customer. As I said, they will classify the customer based on income, for example, and like if they are HNI customer, they will obviously charge the higher price, and if they best example, if you have ever noticed that when we are booking the ride for somewhere, if the ride is been booked by from iPhone user, they will obviously charge the higher price. But if the ride has been booked from the normal Android customer, in that case the price is lower as compared to the iPhone one. So obviously buying power of customer must not be similar in the both market segment in for the price discrimination strategy. Good must not be able to move freely between the market segment. Yes, just now we have learned that customer cannot buy one product in one market and sell it in the other market. Otherwise, it will create the black marketing, which is not acceptable here in the price discrimination strategy. Goods must be able to freely move between the market segment. No, as this is opposite of B, so B is the correct answer. So C is opposite of that, so it's wrong. Last, demand curves in each market must be same. No, it's not. The demand curve is not same in the in like each market. Obviously it differ, because just now we have learned that there will be different price sensitivity in each market. So that's why demand will not be same in the each of the market. Okay, so now question number 108. The demand for the product is 50,000 units, and at the current price of 1,000, market research has determined that there is a linear relationship between the price and demand that can be calculated using the following function. So they have already developed the demand equation. We don't need to do that. The variable cost per unit for the product is 200 and fixed cost are 20 million. What is the maximum total profit for the product X? So this question is related to this one. Demand equation, where we used to generate the price, where we have maximum profit. Yeah, this one is tabular approach and this one is algebraic approach. Yeah. So question is based on the algebraic approach. So they have already established the demand equation function.